Good morning and good to have you with us on what's a very crucial day of trading for the markets. What is the sense you're getting? Is it one day's knee-jerk reaction from the Modi defeat, or is this going to be a prolonged pain?
No, I think, Lata, initially there will be a one-day knee-jerk reaction, as you say, but eventually it might just keep sentiment a bit damp for a while, because you know the kind of hangover politics has on the stock market. And this is not a defeat, it's a thrashing. So I think there might be some lingering sentiment damage for a few days. But I think it's important to see what has happened last week as well, because last week was a very good week for emerging markets per se. Countries like Brazil, Russia and China went up between 4 to 6%. India was down 1.5%. So the relative underperformance leading up to the election result is to the tune of 5 to 7% already. So in a sense, you could say that the market has prepared for this verdict and probably saw it coming. And therefore, to that extent, to say that all the reaction will play out today post facto, I think is being a little harsh. Also, looking at the futures and options positions, you would fully expect that there would have been a significant amount of short positions which might have been built ahead of the event. So if we do start with a gap down of 150, 200 points, taking the index down to those 7,800 kind of levels, it's completely conceivable that some of the shorts who would be then sitting on fairly tidy profits might want to take profit and cover up some of their positions. So both on account of the fact that some damage has preceded this verdict and the fact that there would be existing short positions, you could see a bit of a pullback in the market if the Nifty were to go down to those 7,800, 7,750 kind of levels. But I think what this has done, in a sense, Lata, is added one more straw on the camel's back. In any case, post a fairly average earnings season and the Fed's warning that in December it might take off, and to add the Bihar election result on top of that, I think makes for a weakish market. So don't get too excited if you see a pullback at any point of the day or over the next couple of days, because I think the durability of that pullback might also be in question.
Okay. Udayan, hi, good morning. Greetings of the season to you. The domestic investor has, so far been the saving grace of this market. The fear now is that the faith in Prime Minister Modi's development agenda could be shaken, thereby causing some domestic flows to recede. Would you be worried about that?
It is something to worry about, but I would be surprised if the domestic investor throws in the towel at this point in time. But it would be a bit unfortunate as well, because one shouldn't sound too bullish on a morning like this, because a lot of things have gone wrong, particularly the earnings. A combination of 3 or 4 factors is working against the market at this point in time. But I think a lot of these bad news things are slowly coming out into the open and therefore getting priced in by the market. So if you were to ask, next 3-4 months, other than the Fed, what is the other bad news which might hit the market which it's not priced in already? I think you will have to scratch your head a little bit, because most of the bad news is known in a sense. I think the market needed a jolt on the political front, because the disappointment has been creeping in for a few months now. But I think now people will start talking about the fact that this government is finished, it will not be able to do anything in terms of good policy action, and therefore the market will discount a lot of the bad news, which I think is setting us up in the next, after 2 or 3 months, once the Fed news plays out, for a reasonable rally or even the start of a building process once again, after what has been a really ordinary year for equities. So I know there might be a couple of months of pain left ahead, but I would suggest that the domestic investor, having stayed the course so long and having been so patient, unlike his foreign counterpart or her foreign counterpart, I think this is not the right time to throw in the towel. You probably just need to hunker down for a couple of months more, soak in or take a few more punches, and then probably next year we could start a rebuilding process once again. This is, 78, 7,500 with the bad political news out, I don't think is a very smart point to be selling out.
Okay, no, I think Sonia's question was, will he or will she rather than must she? What's your sense? Do domestic investors really react like that?
There have been a couple of scares, Lata, over the last few months, but domestic investors have actually only bought at times when FIIs have sold. This admittedly has a bit of a local hue to it. This politics business is a fairly emotive factor for a lot of people. So it could scare a few more domestic investors, but the bigger question to ask is, I mean, to answer your question in short is, none of us know. I mean, time will tell whether domestic investors sell or not. You can't look into the minds of a few million investors. But having said that, I think people should now analyze in hard currency what exactly might go wrong because of this verdict. It's one thing to feel emotion, saying, oh, I did not expect this is terrible, and therefore all hell will break loose. But what exactly is the hell that will break loose? My suggestion or my submission will be that in any case, the policy landscape would have been quite difficult in this winter session of Parliament, regardless of the Bihar verdict.
Yes.
I think the Congress and the opposition parties would have made life very difficult for the BJP. Even if the BJP had won, I think, or the NDA had won, I think they would have not been able to progress with a lot of stuff in Parliament. So I think to say that now, because they have lost, they will not be able to move ahead in Parliament, I think is overanalyzing or overstressing the case. Will there be a shift in the way the ruling coalition approaches its policy mix? That, I think, is a very important question to ask, because Nitish Kumar has alleged that the NDA is elitist in its economic policies. It is conceivable, though not a given, that the BJP might say, do we need to change tack? Are we actually pandering to the Modis and the Dalal streets? And are we making the mistake that we made with India Shining? Do we need to have a slightly more left-of-center approach to policy making, which goes down better, going into a 2017 election in UP, which is more important than Bihar? Are we missing a few tricks out here? If that self-doubt creeps in, I think you will find that the kind of reform that the stock market wants might be not on top of the NDA agenda. So I think this is the time to ask those questions rather than just press the panic button and say, the whole policy landscape has changed because of a Bihar election result.
Actually, we have only a minute for the markets to open, but then, the main plank of Nitish's accusations were not really elitist politics. It was also divisive politics. So is there really any danger of populism? And, I'm sure Mr. Modi knew what was coming, and yet in the economic conclave, he delivered one of the a very reformist, a very sensible speech. Do you think we should at all fear populism?
I think you should, and I don't think you should conclude that the BJP knew what was coming. Certainly not a thrashing like this, Lata. I think there might have been a sense that they might have ceded some ground to the Nitish Kumar combine. But to expect a thrashing like this, I don't think in its wildest dreams the NDA would have thought of something like this. And sometimes, wise that people may be, to have a popular verdict in a big state like Bihar go against you like this, almost always will lead to some kind of self-doubt creeping in. People are not that confident after all. So I take your point that this might be more of a social verdict rather than an economic verdict and should be seen as such. That point I agree with you, but would factions within the BJP now lean or persuade the NDA to bark up a different tree? Because BJP is not one animal. There are various animals within the BJP. So I think the pressure to look at alternative policy mix, I think probably the voices will grow louder after such a verdict.
Okay, well, I was only clinging to that straw that it perhaps was more a social verdict, as well that in any case the legislature was not giving support. The Modi government.
Fundamental basis of every rally is earnings, and this time we've got no positive ticks at all. Do you fear that there could be more downgrades after this quarter's performance?
If they haven't happened already, Sonia, I think they deserve to happen. I wouldn't be surprised if the Nifty earnings were to be cut by nearly 10% or 8 to 10% at the end of this earnings season. Last couple of days, I've also been noticing that the mid-caps have started to underperform, in a sense, the broader market or the bigger, narrower market, which is always a sign of worry. There have been a few hits in this earnings season from the mid-caps, but I think broadly the mid-cap basket has disappointed as well, which is a bigger source of worry. You're right in pointing out that earnings is probably the most important reason why the market in the near term might struggle to climb higher. We are already at 7,800. I think it's quite conceivable that we go back and retest the recent lows. That's not very far away. Even if we don't go down in a straight line, there is always a possibility of a short covering pullback, like you saw with Bank of Baroda just the other day. But that will not be very long-lived. I think 8,000, 8,100 looks difficult right now to cross under the current set of circumstances. and the lows could well be tested. The bigger question is, if we do get to somewhere in this zone of 76, 7800, 76, 7900, is this the time where you start to accumulate your stocks once again? Or is the market going to give you a lower low? And should you still be playing the waiting game for another few weeks till the Fed hike is out of the way? That is a question which is it's a tactical question which is a little difficult to answer from here on. So I think the answer lies somewhere in between. But I guess in the next 7 to 8 days, you will find a lot of sectors and stocks giving you fairly attractive entry points, not across the board, but in some cases you'll probably find some reasonable valuations to start buying stocks. This is not a morning where a lot of people would be talking about buying stocks, but I think one by one the bad news, as I said, is beginning to play out. So it's difficult to say if this is the last innings of pain, but we are certainly in the penultimate innings of pain out here.
Okay. I want to ask you more questions on that, but at the moment also look at SR Oil. It's got some relaxation in the delisting norms from SEBI, and that stock is the lone green performer. I say lone because I think it is 15 stocks in the red for 1 in the green. Now it is moderated to 12 stocks in the red for 1 in the green. But still, nevertheless, it's an overwhelming red picture. Before we let Sudarshan go, Sudarshan, just one last word from you. After you looked at the markets now, you want to revise anything? You said that the first stick should be a short covering opportunity. You stick with that? Any specific stocks you want to speak about?
Yes, the first tick should have been, or the first few minutes as we have passed, that should be to cover your nifty shorts. They've made a lot of money in just 4 days, and step aside, maintain your bank nifty shorts if you want to. I think you should. What are these stocks? Almost nothing. With a disclosure that I actually own it, maybe stocks like Adani Ports are now bottoming out, and I've given that disclosure also.
All right. Thank you, Sudarshan. We'll, of course, touch base with you later. Well, to resume that discussion, Udayan, at what point should one fish in troubled waters? Only after this 7,600, 7,900 kind of range materializes, not right away at all?
You know, this 200 points of timing is always very difficult to do, Lata. But, if you were to turn around after 6 months and say, I chose to wait for the last 200 points in the Nifty, which came about or did not, you're being too cute. So for traders, it makes a lot of sense to play for 200 points on either side. But if you're more or less around the bottom, then I don't think it matters once you've caught the trend on the way back or towards the nearing the end of the pain. My difficulty is this, or twin. One is, what takes the market higher from here on? Even if 7,800 or 7,700 is the bottom, but what is leading to that upside to 8,400 and beyond over the next few months? And that's a question which I'm struggling a little bit this morning. Also, if you look at valuations, after the kind of earnings that we've had, is 78 or 77 or 7,500 sacrosanct from a valuation perspective? Or if the market comes under some kind of liquidity pressure, particularly from foreigners in the light of the big event globally, or from domestic investors too, who don't have to sell, but they stop buying in the quantities that they have been buying for a while, does the market have enough valuation safety cushion under its belt to stop at a particular point because it begins to look too cheap? From where we are right now, I think on current valuations, we are probably talking about 16 times FY17. Admittedly, it's an average of two very bipolar sets of sectors, but it's still 16 times 2017 earnings. Is that so cheap that a 3% cut in the market will make it look terribly cheap and attractive? Or can the market, for example, go to say 7,200 without looking screamingly attractive? So both from a valuation cushion point of view and from the triggers for an upside point of view, it's a little bit challenging for investors to say we must go out in what stock market parlance they call a thumping table buy signal. I don't think we have a thumping the table kind of a buy signal out here. The best you can say is the downside might be limited because India, probably even with its problems, is much better off than many of the other competing economies.
Okay, I just had one question which was sector specific, Udayan, on the pharma space, because in the last 2 days we've seen Dr. Reddy's fall about 20% because of the US FDA issues, and now we have Sun Pharma added to that list as well. These stocks have given great returns to investors in the last couple of years. Do you use it as an opportunity, or now do you think that one should start to get a bit cautious there?
I think people in pharmaceuticals would be quite worried. You had the Lupin results, the second quarter in a row, which were not great. Then you had the Dr. Reddy's scare, and this is the bluest of blue chip in the pharmaceutical space. Dr. Reddy's lost 15% in one day, and that is a reflection of how much valuations had expanded, because the first whiff of bad news sends a stock like Reddy's, defensive in nature and outstanding in quality, down 15% in one day, which tells you that these stocks are... Everybody wants to own them, but they have very little margin of safety built into their price, and the merest of bad news can send these stocks down 15-20%. The same thing has happened in a sense with some of the consumer-related names. I think Bata is down some 40% in the last few months. Jubilant Foodworks has come off so significantly from a very lofty valuation point. So, to answer your question, yes, I think one should be a little concerned about the kind of news flow which has come out from the best sector of all. And that is something which a lot of longer-term investors will tell you that they constantly think about, because when a trade is crowded, like pharmaceuticals and private sector banking, then you always have that, or should have that small inkling of doubt at the back of your head that it's a consensus trade, but could it change at some point in time? Because everybody owns these stocks and wants to own these stocks and has nothing bad to say about these sectors. So at some point, could the trade change and something else start to outperform, and then you're left holding a baby or a few babies which are very, very expensive.
Okay, well, I just want to check whether there is something positive about the developments, the way I see them. I mean, as you said, India is in competition, not a bad market and not a bad economy compared to competing economies. Also, you have to give it that even this far, it was not as if the legislature was helping, or there has been any major legislative efforts by the government. It's largely been execution. And even on Friday, we saw that a fairly decent attempt at disentangling the Discom woes, which will be positive, in the days to come. You saw CV sales picking up, and now you saw even the personal vehicle sales doing not so badly, passenger vehicle sales in the last numbers that came out, the monthly sales numbers. Don't all these add up to something better in terms of growth? If not in the fourth quarter, at least in the quarter thereafter, and stock markets usually buy ahead of that.
Sure, it's just that which quarter is the question, Lata. I completely agree with you, and nobody can dispute the fact that India is better off than most of the emerging markets at this point in time. But now the question to also ask is that something which is reflected in the positioning of most investors? And you'll find that the answer to that is yes as well. It's not like you wake up this morning and say, is India good compared to Brazil and Russia? You just look at the portfolio of every foreign investor. You look at the amount of money which domestic investors have put into equities over the last 18 months, and you would have to conclude that this good, relatively good position that we are talking about in the Indian context is probably, as they say, in the price, in the positioning, in the ownership as well. So there's nothing incrementally positive that you're hearing right now. The stock markets don't react to something which it has known for the last 18 months. They react to the incremental rate of change of news. But in summary, I would say one thing, Lata, that this morning's market reaction to the seen as adverse political development should drive home one very important point in India, which is, in my eyes, that you should not over-expect something from the political spectrum. I think the market was guilty of doing that after the Lok Sabha elections. They thought the world had changed, and I think the last 18 months has taught them that the world has not changed to that extent. And this morning the market might be guilty of thinking again that the world will change in the opposite direction because of a state election result. I think the reality in India is that policy is a middling kind of thing which ambles along and is only a marginal lubricating factor to the overall economic cycle that India follows. And it's only in the once in 25 or 30 years that there is an outlier phase from policy action. It's not the norm, it's the exception. So I think to expect big things from the policy front, which the stock market always talks about, or to expect completely bad things from the policy front, I think is over and under expecting. The truth is in the middle. India is a very middling kind of a policy environment where a few things happen, the stock markets get excited, few things don't happen, the stock market gets very despondent. But I think the Indian economic cycle actually follows a path of its own with a little bit of prodding and pushing from the policy front, and that's the reality for the last many years, means maybe one or two exceptions in the last 30 years. So I'm not in this camp at all which believes that stock market should erupt in fantasy because of an election result or go into complete depression because of another election result. I do not follow that school of thought for 1 minute. I did not think that was the case after the Lok Sabha result, and I do not think that is the case this morning either.
All right, Udayan, that's some sage advice coming in. We'll take that point. Thank you for joining us and giving us all of your views. Well, that's the word coming in. It's not the right time for domestic investors to throw in the towel just yet because of all the bad news. Perhaps the worst is already in the price. Let's invite one more gentleman to give us his view. Gautam Trivedi, the MD and CEO of